Welcome to the Daily Update, where I'll go over the action in the market for Monday, December 11th, and then we'll see how things look for Tuesday, December 12th. We had another up day, kind of surprising. Personally, I thought we would be a little more sideways. We didn't see that much of an advance, but we are moving a little bit higher. You've got the market pretty much buying into this idea of positive seasonality. Unfortunately, we have a big report coming out on Tuesday that could have a real impact on the market, either positive or negative. What will be frustrating is if we get mixed results in the CPI report that comes out that leaves the market still rather ambiguous as to where things go. At the same time, even though we're looking positive, we are extreme positive to the upside and becoming even more extreme in the intermediate term. And we even have one of our long-term indicators that is starting to look extreme. Okay, but we're positive. We have to ask this question: are we setting ourselves up for some kind of a decline from here? When everybody is assuming the market's going to go in one direction and they're betting on that and they're pretty much taking that for granted, the market quite often will have a real propensity to go in the opposite direction, at least enough to scare people that we're getting a little bit overconfident. On the other hand, we are looking positive. We get a good report. The market really likes that, and that could really shoot things higher and feed more into the positive seasonality that we're seeing. Let's go back and talk about what happened. Right at the open, we had a flat open, and then prices stayed slightly above the unchanged level. So that went on pretty much throughout the open. And to me, the open is the first hour, hour and a half to 2 hours. It's kind of an ambiguous time. As the day went on, we were able to rise up to R1 at 46.18, and then we closed at the intraday high. So closing right at the high is a positive thing. We were up 0.39%, so not much on a percentage basis, and we were slightly above average with volume. And we are positive, and I'll go through and explain the different sides that I'm seeing, at least for right now. It's all about CPI, and that feeds into the inflation, interest rates, growth concerns, earnings per share, all the other things that seem to feed into the market right now. The fixation is going to be on what is that report going to say? Is it going to be market friendly? Is it going to be unfriendly? Or is it going to be rather neutral? Of course, we're keeping an eye on all the different geopolitical events. Then some comments that we can make. Mega caps didn't really have a big upward movement in Monday's session. They hung in there okay, but they did underperform the rest of the market. But the semiconductors did end up having a strong day. There was some news that came out that's more friendly about a new factory that's going to be built, I believe, in New York. And the semiconductors like that. Our short-term list of extreme readings is getting a little bit longer again. Of course, we have the short-term ADX that's well above 40, suggesting that in the short term, we're getting to a pretty high reading now. The 20-period exponential moving average, the Williams percent R. The Stochar RSI is not there yet, so it's not on the list. The CCI 14 and 20, the stochastics, the PMO oscillator, it's still trying to determine if it wants to go up or start to roll over. And then the VIX based on 9 periods as well. And our intermediate term list is now getting longer as well. We have the ADX in the intermediate term going above 40 also. So we're seeing some extreme readings with our trend, both in the short and intermediate term. We have the 50-period exponential moving average, the standard deviations chart, the Arun indicator, the PMO studies, the Sean trend meter, the bullish percent index, both for the S&P and the NASDAQ 100. That's a new one now. The VIX based on 14 periods, that should be RSI, and the new high, new low study for the S&P 500 based on 10 periods. And we even have a long-term one. Our 150-period moving average study is starting to get a little extreme positive, and we're still dealing with this scenario. The Fed's keeping rates higher for longer. They're going to be coming out with a decision this week. They probably will not raise rates, but it's going to be what will they say in their statement, and what is Jerome Powell going to say in his press conference after the meeting. The market is really trying to figure out now, is the Fed finished raising rates? Are they going to have to raise them again in the future? Will they possibly be able to cut rates going forward? Those are the real variables that we're dealing with right now. Keeping an eye on Israel, oil, and then earnings. The dollar was down and interest rates were also down. The 10 to the 2 and the 10 to the 3 month. Those yield curves are still inverted. Sentiment didn't really change from Friday's close. We came in at 68, where on Friday we were at 68 as well. We are positive with our trend, but as I've said, the short and intermediate term ADX indicators are both above 40 now. However, our bias is positive and our momentum is positive. We didn't get any economic reports in Monday's session. We're going to be getting some pretty important ones in Tuesday's session and then the rest of the week. We are at 4.24% for the 10-year yield, still above the 4.02%. There's really no economic charts to show, but I am including the Fed watch, where right now there's a 98.4% chance that at the meeting, when they make their announcement on Wednesday, that they will leave rates unchanged. Here we can see how things have changed over the last few days. It's actually become a little bit more convinced that the market or that the Fed will leave rates unchanged. Here's our intraday chart where we had a flat open and we just danced along the unchanged level, a little bit positive. We bounced a little bit. Then later in the day was when we started to take off. This is as interest rates were starting to come back down, and that gave some support to stocks. We made it up to R1 and ended up closing pretty much at the high for the day. Here's the intraday chart. We didn't really see a lot of action when the futures initially opened Sunday afternoon or evening. Then we saw the positive action going throughout the day, and we are a little bit higher in the initial overnight session. We're still seeing where value is outperforming growth. The red line is above the blue line. However, they were both positive in Monday's session. But this is a bit of a concern when we look at the S&P growth to value ratio. It's continuing to go down. It did bounce back a little bit, but it ended up declining overall for the session. Our end of day charts show that both growth and value were up for the large caps, but growth underperformed. They were about even for the mid caps, and they actually outperformed a little bit with the small caps. This is a chart that personally I think is a bit concerning, where we've been seeing the index going up, but we're seeing the S&P end of day growth to value ratio going down, even though we ticked up a little bit in Monday's session. We are chopping sideways. We are still in a longer term uptrend, but we're not seeing a real healthy upward move like we would like to see here. Then looking at discretionary to equal weight, discretionary to staples equal weight, we are seeing a little bit of an improvement here. This is starting to break out, so that is encouraging. Keeping an eye on our trend, here we go with the ADX. This is the intermediate chart, and we are going above 40 right now. And other times when we hit this level, see that marked kind of a pretty significant top here. Now, we could still go higher, and we could play out differently than we did before, but we just want to be aware of this, where our shorter term ADX chart is continuing to advance and is really not showing any signs of rolling over currently, but we are positive on both charts because the green line is on top. Volume is still right at about average. We're not seeing a real pickup in volume right now, but we're not seeing it really drop off either. Sentiment, we're still wondering if we're in this choppy phase. When we look at the average for the VIX from 1990 to 2022, if we stick to seasonal norms, the VIX should start to drop at some point, which usually means stocks are going up. The Ulcer Index is still suggesting there's really no fear in the market. We saw a little bit of a tick up with the line chart, and we were pretty much flat with our bar chart when we look at the VIX. Volatility picked up just a little bit. This may be some hedging going into the end of the day when people are starting to hedge against the report that's coming out on Tuesday. We did see a little bit more of an improvement here with our risk on to risk off ratio. Another day or two of this going up, and we could actually switch more positive. Looking at our advanced decline line, where we are showing some improvement based on price and volume, we're flattening out with our moving averages, but we saw a real nice expansion of new highs in Monday's session and really no new lows being generated for the S&P. We're still positive with the advanced decline ratio. Accumulation distribution is positive. The chicken money flow is turning back up. That's positive. We're looking better with our NYSE cumulative advanced decline line as well as our regular advanced decline line, even though it was slightly flat. And our other NYSE advanced decline line is showing some improvement. Looking at our average, take that back. Looking at our advanced decline line studies, broader market look here, We are showing an improvement with the common stock, the S&P, the mid caps, and the small caps. So looking at the daily chart, we are starting to break out above this previous high. We actually closed above it on Friday to set a new 52-week high. The thing now is we're still in this area of resistance. See, we come back up here. We have a previous high going way back here into, what is this, late March, early April of 2022. Is the market going to run into some problems there before we try to go higher and set a new all-time high? So we're not out of the woods yet as far as resistance is concerned. On the bottom, we do see where we're above the moving average. The 20-period exponential and 50-period exponential moving averages, they're starting to get extreme. They still have more room to go up, but they are looking extreme positive. The Williams percent R is extreme positive, but it can stay up here for a while. The CCI 14 and the CCI 20 are both extreme. They could also stay here for a while. And the force index is showing some improvement. We're crossing back above the midpoint. The midpoint is ever so slightly starting to turn back up. Now, this is positive overall because we're green and above zero. We're looking a little extreme again with our short-term stochastics, intermediate stochastics, and our long-term stochastics are still flat, but they're extreme positive. And we're still up in this +3 standard deviations with our Keltner band standard deviation study. Then intermediate term, we are looking positive with the balance of power. We're positive with the go, no-go system. We're still up at the blue line here with our highest high value, and the midpoint continues to advance. The TTM squeeze, though, is still continuing to fall. Now, it's positive because it's blue, but at some point, if price starts to go up, we want to see this indicator start to go up as well. The ease of movement is showing a little bit of weakness now. We're still above zero, so we're positive, and maybe we've been working off some of that extreme reading. The Erin indicator is still looking rather extreme. We have the green line on top. The red line is pegged near the bottom, so that's why the oscillator is very positive right now, and perhaps even too positive. The summation index based on price is still going up, and we're starting to break out now based on volume. So we're looking good, but we're coming back to previous levels where other times this is where the market has topped out recently. The NYSE summation index based on price and volume continue to advance. We're turning up just a little bit with the Swenlin trading oscillator based on price and volume. And here's the PMO where we're still getting an extreme reading. We haven't crossed below the moving average yet. We're rolling over, but still positive based on price and volume. We're not extreme with the PMOs that are rising, nor are we extreme anymore with the buy signals, but we're still extreme with the PMOs that are above zero. We have maintained 2 days now of looking positive with the Elder's Impulse system for the S&P with green bars. And we're back to looking more positive with the parabolic SAR system. The slope oscillator is no longer extreme now. I took that off the list. It has been declining, and we want to see, is this giving us some kind of a heads up, or is it just working off that extreme positive reading? The MACD is pretty much right on top of its moving average right now. This is more intermediate term. If we can turn and go back up, that would turn things more positive. So we're still seeing some mixed signals when we look at all of our oscillators. In the short term, the TSI is trying to come back above its moving average, so we're seeing a mixed signal there. The MACD is right on top of its moving average. We're still positive with the PMO, but we're negative with the PPO. It's actually dropped below its moving average. We're rolling over with the tricks, and we're actually crossing below the moving average with the KST. So we're getting a mixed picture there. We're still above all of the plotted moving averages, and we've started to go extreme now. We're above 70 with the bullish percent index. Now, this could still go higher, but we just want to be aware when it starts to get to this kind of a reading. We saw a little bit of a tick up with the NYSE bullish percent index, and the NASDAQ 100 bullish percent index continues to be extreme positive. It can still go up from here, but this is the area where we really start to take notice. The Sean trend meter is above the red line and looking extreme positive. The Chaikin oscillator, not quite extreme positive yet, but is still advancing. The money flow continues to be above 50 and advancing, as does the ultimate oscillator. The vortex is starting to turn back up with the green line. That's positive. The RSI 14 and 9 have now gone above 70, which is an extreme positive reading. On balance, volume continues to be positive. We're seeing some improvement with our 250 period moving average study. We're actually breaking out a little faster with the 200 than we are with the 50. And then looking at the trend line, we're coming back to this previous high that we set here earlier in 2022, where we have now gone above this other August high that we set here. And we're wondering, can we stay above this now? And then our different charts. On a trending basis, we are positive with the hike in ASHI, the KEGI, the Renko, and the three-line break. Those are all pointing higher. And then here's looking at the 150 period moving average study. We're just barely starting to cross above this red line, denoting an extreme positive reading. We're still looking okay with the 200 and have not become extreme yet. And the Zohar check has switched back to neutral. It had been at -6 and we came back up to 0. Our other indexes, we are still seeing where the equal weight is underperforming the S&P 500, and we're kind of going a little bit lower. We were down just a little bit with our ratio, showing that the broad market did better than the mega caps. We were up with the Dow, up, but underperforming and seeing a negative divergence with the transports, and we were up slightly with the utilities, and the transports continued to underperform the Dow. The Dow is starting to look like it could be breaking out currently, and the diamonds, though, they still remain neutral for the Elder's Impulse system. The NASDAQ is coming back up to the high end of its range and back up to this previous high. Is that going to provide resistance? The NASDAQ 100 is breaking out and is above these previous highs now, so it's looking a little more positive. The Elder Impulse system for the Qs remains positive with green bars. But on a momentum basis, even though we're improving, we are negative. We're dropping below the moving average. The small caps, they're looking more healthy right now. They were able to get above this R1 level and actually close above that and close near the high for the day. However, we are still in a negative trend. The blue line is below the red line. And we were able to just barely close above this resistance level. So that's turning the Russell 2000 a little bit more positive. However, with the RSI, we're starting to get extreme. We're still working off of a longer-term downtrend, but in the shorter term, the MACD continues to be positive. But we are still neutral for the small caps when looking at the Elder's Impulse system. And we just barely closed above R1 here, this resistance level. We're right back to this previous high. So the mid caps are not necessarily breaking out yet, and they are also in a longer-term downtrend. And we continue to be neutral for the Elder's Impulse system when looking at the mid caps. The financial sector was up again and is looking more positive. The micro caps were down on the day, but they're still above 100 and still above their 200-day moving average. The FANG index was up about 0.25%, but we still have not been able to decisively break out above these previous price levels. And we're wondering, can we come back, set a new time high? We're almost there right now, depending on how you look at your charts. Can we break above that, or is this going to provide some kind of resistance? The dollar ended up being down slightly in Monday's session, but it's still in a longer-term uptrend, even though it has been seeing some weakness in the shorter term. We were down just a little bit with the 10-year yield and up just a little bit based on price, and we're just a little bit underneath the 200-day moving average based on price. This is still flashing some kind of a warning sign. When we take the 1-month yield, subtract the 3-month yield, we're still getting a positive result. We should be getting a negative result. I don't really have as many charts here. We're not seeing an awful lot of changes here. Just to show you that we're still extreme positive with our 10-day average of the S&P 500 highs minus the lows, and that's been there over a week now. And we're still above 0 when we look at the broad market and compare the 5-period moving average of the highs minus the lows. We're still above 0 and advancing with our 50-period moving average of the new highs minus the new lows. And we're still coming down with the 2-year yield, which is giving some support to the S&P. So what's our outlook for Tuesday? Just know that on Thursday, the European Central Bank, they will be meeting to discuss their interest rate policy. We're still dealing with earnings season. We're still dealing with all the different geopolitical events. Our technicals, we're still positive, but now we're overbought in the short and intermediate term. We're wondering, are we breaking out of the range? Or is this possibly a setup where we're hitting resistance, we're overbought, and then the market just decides to turn and go down? We will get the NFIB small business optimism. That'll be coming out, but the big one is going to be CPI. And then keeping an eye on all the different geopolitical events. So we have CPI on Tuesday. We're going to get PPI on Wednesday, and then the Fed's going to come out with their announcement. We'll get retail sales on Thursday, and then industrial production and capacity utilization on Friday. Looking seasonally, we are in options expiration week now, where we're up 69% of the time and down 31% of the time. Looking at just December 12th, we're neutral to positive with the Dow, where we're actually, this should be neutral to positive with the NASDAQ. I forgot to add that there. And then we're wondering if the January effect is going to happen, where the small caps end up outperforming the large caps. That's statistically what has happened. We're wondering, is that starting to happen now? And we'll be on the 8th trading day of the month, where we're pretty much flat here when we look at a pre-election year. And this is the CPI report that will be coming out. We've declined just a little bit based on the Carson research, but we're pretty much flat for the 12th of December. We will be on Tuesday, which tends to be one of the more negative days of the week. And we're wondering, if we got beyond this dip now in a pre-election year, are we going to start heading into positive seasonality? And we're seeing pretty much that same kind of thing with our other seasonal charts going forward from here into the rest of the year. Although on this chart, we do see some weakness in the latter part of December. We're wondering if we're beyond this downward slope with the Carson chart and starting to now move more into positive seasonality. The equity clock chart, we wonder, we never really did see much of a decline here. Are we going to be able to go back into the more positive seasonal time? And then we're looking at the Stock Traders Almanac for the NASDAQ, pretty much flat. Didn't show a lot of weakness here. We were wondering if we're beyond that weakness with the S&P 500. So our scenarios, we're not going with the down one now, because we really just, there are warning signs and there are reasons to be concerned, but we're not seeing any evidence of that yet in our charts. So we tend to lean more towards the positive side because we're starting to break out of that range. But we are now getting extreme. And I put this in red here because both the short and intermediate term ADX indicators are both above 40 now. So the warning signs, our risk on, risk off posture does seem to be showing some signs of improvement, but our momentum oscillators are mixed. The Copic curve is negative. The Russell small caps and mid caps, although improving, are still in longer term downtrends. Then the positive signs, the daily special K chart has switched over positive. The equity put call, I ended up getting the data later, so it's not included in today's video. It was down just a little bit, if you kind of guess, because we had an update, but folks may have been hedging ahead of the economic reports coming out. And we're wondering, are we getting extreme with the 5 period? We're still, for the most part, heading down with the 253 period. Our oscillators are mixed. The parabolic SAR chart is now positive. The vortex is positive. And we're starting to get extreme with the bullish percent index for the S&P. The Zohar-Chak method has switched back to neutral. Small and mid-cap growth is really chopping sideways, but tends to be positive longer term. And the financial sector is looking more positive. The longer period new high, new low study continues to be positive. Then over the weekend, I get these emails, and some of these folks are perma bears. I'm not a perma bull. I'm not a perma bear. I'm a perma realist. That's the way I like to look at things. There are times when the market goes up. There are times when it goes down. That's just a fact. But you get these folks that no matter what happens, they're sure that doom and gloom is right around the corner. And this is one of those. I'm not going to read this to you, but I will tell you that this is a person that I've followed for well over 20 years, and they couldn't have been more wrong. If you use the conclusions that they reach and do the opposite of what they say, you would have done very well. And another thing that I'll just kind of make an editorial point here. These folks tend to really rely on Elliott wave theory, and it's almost always negative. The person that puts this out, they've been promoting the idea that we're going to start that wave 5 downward move for over 20 years now. And no matter what happens, just around the corner, life as we know it is about ready to end. So I look at this. I like to read this. I like to know what these folks are thinking. But why subscribe to this person's newsletter if you know what their ultimate result's going to be? They draw out their Elliott wave theories, and it's always an arrow going down for stocks and an arrow going up for gold. And that's what they reach all the time, where I like to look at what is the actual evidence. So anyway, if this person would actually stick to their own indicators, they would do better, because some of their indicators are actually kind of helpful. Anyway, feel free to pause this and read through this and see what you think. So our conclusion, we're positive, but we're overbought. We're breaking out of the range. But is this a setup? Is the market setting itself up for some kind of a decline because everybody's assuming that we're going to go higher from here? Not saying that's what's going to happen, but sometimes the market will treat things that way. We're also wondering if things are being set up in the short term. That's mainly what we're focusing on now, but we continue to be overbought. We are breaking out to the upside, and we are positive in the intermediate term. Are we starting to get extreme? We're seeing more and more of our indicators are getting extreme positive, especially the bullish percent index, but we're still positive in the longer term. Thank you. I hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.